With the federal election now decided, the property investment landscape has changed, and this impacts every property owner. The good news is that there are now some great new opportunities in the market, but if you're wanting to maximise your returns, your game plan will need to change. Host of the Smart Property Investment Show, Phil Tarrant, and best-selling property author Paul Glossop, along with special guest Tim Lawless from CoreLogic, can help you make that change. Our live webcast will unpack everything you need to know to benefit from the property market in light of the policy changes and give you an opportunity to have your questions answered. Register your seat for this live webcast now at smartpropertyinvestment.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how are you going? Thanks for joining us on the podcast. Recording on a Monday morning, Monday afternoon, after the weekend, and obviously property is at the fore of every single conversation I seem to have when I'm at dinner parties or barbecues. I often get quite fatigued by it, to be honest with you. I chat about it a lot on smartpropertyinvestment.com, and I'm very fortunate that I'm probably quite unique in this game that I can pick up the phone to speak to anyone in Australia who is a learned expert around property and have a good chat with them. But everyone seems to be an armchair expert when it comes to property, and that's cool. You know, it is a passion for a lot of Australians as a wealth creation vehicle, or they might just be into property, inverted commas, or love property. But I invest in property because I use it as a wealth creation tool. I do enjoy the process of doing it, and it's nice to win in property, but be careful who you talk to and who you speak with and how you frame your perceptions around how to invest in property. If you've been tuning into the Smart Property Investment Show for a number of years, you'll know that we have a very conservative view on this, and you're not going to get rich quick, or you're not going to get rich overnight. Lean on the people to help you. Use trusted professionals, accountants, buyers agents, brokers, financial planners. Lean on them and make sure you get them all talking together to get the right job done. Today, I'm just going to pick up on that whole theme around who to listen to in property. And we're fortunate in Australia that we have some great vehicles, some great platforms for sharing knowledge and information around property. And I'd like to think Smart Property Investment is one of them. And particularly this podcast, the Smart Property Investment Show, the community has been growing rapidly. We're getting sort of over 100,000 people connecting in with this podcast every single month, which I get a real kick out of it, because hopefully what we say is the right thing to do. It gives you some greater clarity on how you should be investing in property. I like bringing people into the studio to have a chat and help me out with these things. Today, I've got Ben Handler. He's director of the Buyers Agent Institute. We're going to have a chat about property, but what we're going to do today, and I've thrown this straight at him, I just Googled Property News Australia on the basis of running off the back of a hot weekend of auctions and otherwise. It's good to see that Smart Property Investment is one of the top listing things on there. So it's people are getting their news from the right spaces, but there's some other stuff here as well that you'd expect. A little bit from ABC, the Australian Financial Review, Domain, The Guardian, all the usual suspects, news.com.au. So I'm going to read a couple of these headlines out and we're going to have a chat about it. First one, property market has a spring in its step, but the rebound is not yet in the bag. This is from ABC, and the first sort of couple of sentences, I'll read them out, not to give these guys too much coverage. Go to smartpropertyinvestment.com.au for all your latest property news. But the tentative shoots of the housing sector's recovery have continued to emerge after solid Saturday of auction results has fired up optimism that what has been, historically speaking, a fairly minor correction may be over. All right, Ben, is there a correction in the market? Is a correction over? Is there a correction underway? What's going on, mate? Do you take stock of this? Is this fair? There's a lot of graphs and stuff on this as well.
No, I don't take stock of it a lot. I mean, the markets move very regularly, and I think after the election, there's definitely been a shift in the market with sentiment.
Yeah.
Like there's been a massive shift. And I mean, there's no stock in a lot of places in Sydney, and it's causing very high demand and prices are going high again.
And that's what's happening here. And you know, look at this stuff here. It's covering Sydney prices fell 50% from top to bottom. Melbourne 10% top to bottom. Perth 20% slump. August house price. It's just, whenever I read this stuff, I get a bit confused by it because it just sounds like a lot of noise and stuff. And pretty much I could read this story today and I could probably read the same story 20 months ago or 20 months in the future. And it's probably going to be pretty similar stuff. Talking about auction clearance rates, low auction volume supporting prices. What's your thoughts on that?
Low auction volumes.
Low, so not many properties up for sale. So therefore, auction results are good because you've got more punters looking to buy than what there is stock. That's your point.
I mean, sellers, they're mindful that if they sell, what are they going to buy? And so a lot of sellers are postponing selling. And then if a good asset gets on the market, I mean, it's hot. Everyone wants to buy it because there's nothing there. And people are relying on real estate and domain. Most punters out there buying property, they rely on real estate and domain.
It's a really good point. So Markets can be skewed a little bit by buying intention, access to finance, and what stock is available on the market. And you make a really good point there. You're saying that vendors don't really want to sell properties right now, hence the reason why there's not a lot of stock on market, because if they sell, they've got to buy. So the buying scenarios for those vendors isn't as good or as favourable as they want it to be. What makes them think that way?
I mean, they look at what's on the market and they realise that there's not a lot there. And then the smart sellers, they are selling for high prices and renting. A lot of vendors don't want to rent. They want to move straight into a property. So they're just withdrawing and not selling because they just know there's nothing out there for them to buy. However, a lot of the good real estate agents, they are sharing that the sophisticated vendors that want to get a really good deal, they're moving straight into a rental property.
This story here, and this is from the Australian Financial Review, obviously coming out today. Their headline is "Alarm Bells Ring Over Housing Debt." And it starts, highly leveraged households in Australia have reached problem levels, in inverted commas, as poor housing affordability is combined with an overextension of household debt, creates a tipping point that, with an extra ingredient, could create the perfect storm for a recession, according to the new report by Oxford Economics. So this is talking about this big recession word that everyone's sort of banding around at the moment. And we've touched on it a little bit on smartpropertyinvestment.com.au. What's your view of it all? Is this a Sydney-centric thing or is it a nationwide thing?
It could happen. I mean, there's talk of it every 2-3 days. And I mean, I remember 5-6 years ago I was hearing it. And I mean, I don't have a crystal ball and I don't think anyone does. And so it's just hard to tell. There's something negative coming out every few days.
Well, it's the media, right? We're going through it here right now. And this is something which is, you'd be quite familiar with this sort of concept. This is Domain. Domain says, do blue chip suburbs have the best property price growth? Right. Some of the best opportunities for property buyers over the past 5 years have been outright sought after blue chip suburbs, new research shows. Although conventional wisdom suggests price growth is stronger in leafy, expensive neighbourhoods close to the city centres, the property boom over recent years sent buyers flocking to the most affordable suburbs in Australian cities. So this is saying, do you buy premium blue chip out your neck of the world in the eastern suburbs, or do you buy in the less affluent suburbs, your black towns of the world where I grew up, to get a better bang for your buck in terms of investing in property? It's a tale of two cities, right? Where do you start? Where do you end?
Well, I'm a bit biased because I always buy personally in the blue chip. That's been my strategy. And I haven't really ever in my portfolio focused on yield. It's always been on growth and buying in those suburbs. So it's worked for me. I mean, you hear a lot about off the plan as well. Don't buy off the plan, or so much negativity around buying off the plan. I'd never bought off the plan. I bought 2 years ago off the plan in Potts Point, blue chip suburb. Chose good development, small boutique block, about 43 apartments, and moved in there beginning of this year. And so could probably sell it for an extra $450,000 than I bought it for 2 years ago. So the reason I'm sharing that is that's blue chip.
Yep.
You hear so much negativity about off the plan, which is true. There's a lot of shonky developers, a lot of shit products there. But if you pick the right development in the right suburb, you can go right.
Let's have a chat about that, because so you bought off the plan in Potts Point as an owner-occupied investment rather than
and never done it before.
And never done it before. Yeah. And from what you said, it sounds pretty good. So if you were to on-sell it, no worries. If you were to move out and rent it out, you probably get a reasonable yield on it. Why do you think your purchase in the offer plan was one of the good ones rather than one of the bad ones, which you seem to hear so many about? Because I sometimes fall in the bucket of, I don't beat up off the plan, but I don't hear too many real positive stories. But every now and then I hear someone doing really well out of it, which is yours. So how did you assess where to buy and why that particular block, and what sort of due diligence did you go through to do that?
Yeah, I was skeptical because I've read so many war stories on it. And my previous company, Cohen Handler, we'd never bought off the plan. That wasn't part of what we did. So what I did was, I came from a development background. I worked for a developer, Charter Hall. So I look always at the developer, and the developer was a Singaporean group, very well established, very, very good track record. So that ticked the box. I looked at the street. It was a very good street in Potts Point, an up and coming street. And then I looked at the builder, and the builder was from what I gathered, was a very good group. And so I also looked at the size of the building, and it was small. It was boutique. It wasn't like an Omnia, which I've got nothing against, but it wasn't a big style of development. And I just also looked at the area of Potts Point and just thought, this is a high demand place. Like, people want to be here. It's very close to bus stop, train station, just very good centrally located place. And so I kind of just looked at that.
It's interesting. I had to go out to King's Cross on last week for like a work function of the thing. So I drove up through from Garden Island up. Is it Bayswater? Not
Bayswater Road.
It's straight up the guts of the cross, right?
Yep.
And geez, that's changed.
Oh,
you know,
yeah.
coming up the hill there into, you know, the northern end of that, you know, up until the fountain in King's Cross, it is absolutely changed place. That Potts Point, isn't it? Like,
Yeah.
is it around that way? Where
Absolutely.
you are?
I was on Bayswater Road.
Okay. It's great. It's good restaurants up there now, but it is, I'm not going to use the term gentrified, but it's evolved quite a lot. And that whole sort of creep is sort of heading out or going even further into the cross now. So you probably bought at the right place. You're probably champion of the lockout laws rather than making a big noise and complain about it. But moving right along, I'm going to go to a break quite quickly, and I'm going to keep going through the news when we come back. Back in a moment.
We get it. You're here listening to the Smart Property Investment Show, and you're being interrupted by this ad. We value your ears just as much as your eyeballs, so we'll be quick. Join passionate property investors on Facebook today, and we'll fill your Facebook feed with useful tips and tools, plus free education from industry experts and a tribe of people who get it. Passionate property investors. Find us on Facebook now.
G'day everyone, welcome back. I'm here with Ben Handler from the Buyers Agent Institute. We're going through what made headlines over the last couple of days. I've got a story here, Ben. This is property headlines, not headlines in general. Alpine property in hot demand despite climate change worries. Okay, as from the ABC. Alpine real estate is getting more expensive in Australian ski resorts despite concerns that climate change will diminish natural snowfall. So a lot of investors like the idea of an alpine retreat where they can buy it, use a couple of weeks a year, go skiing in the winter and then rent it out to other people sort of during those peak months, but also get some rental income in there. What's your views on holiday houses and these more lifestyle investments versus smart, well, maybe not smart, but, you know, quite driven capital city purchases for a particular reason, which is just capital growth and yield?
In the ski resort style, I don't have experience with, but from what I've heard, I mean, I personally don't have experience with this either, but from what I've heard with people who use the Airbnb or the, you know, the executive rental style of strategy, I hear it's very effective. There's people out there building serious portfolios and they're using Airbnb to lease them out. So it's very high yielding and the occupancy rate is pretty consistent throughout the year.
Well, some of the yields you get in these ski places, you know, occasionally I'll go down to Thredbo during the winter. I haven't been for a year or so, but it's a lot easier now to find these places that used to be really tightly held by a number of property managers that rented out all the ski accommodation. Now you can just do it yourself via these, you know, Airbnb type hubs, or there's managers now that will manage it for you. This story here is saying, skiing numbers are up, so it's property buying has been fantastic. The number of alpine home sales changing hands peaked in 2017. During that year, 271 were sold in Victoria and 460 in New South Wales, just on ski-based properties. So there's a lot of turnover there. People are transacting these properties.
Yeah, I mean, I wonder what it's like in summer though. I mean, people are probably hiking there, so I wonder what it's like over that period of time.
Well, this is the problem, right? When you get these lifestyle assets, and you might get great rent as a property investor during the winter months if it's skiing, but summer's a bit light. But from what I understand, you know, the local sort of tourism community is pretty active to try and drive traffic down there during the summer. Everyone benefits from all the shops do, the hotels do, and the landlords do. So a lot of work going into it. It's one of these sort of fundamentals of investing to have a multi-disciplined economic footprint for, you know, if you're investing in areas outside of the capital cities, you got to make sure you're making a buck. So anyway, it sounds like the ABC's just trying to get some reads off the back of what has been a bumper ski season and people who are looking for it. Here's another ABC story. Chinese Australian property investors stand to lose millions in collapse of apartment developer Ralan Group. And it goes on to say, essentially you go and read it, a whole bunch of people, looks like an off the plan story, which hasn't gone through. This goes back to your point around how do you go about ensuring that developer's the right developer for an off the plan purchase, and you can get it right, to your story.
Yeah, I just always am skeptical when it's a huge development. Just, you know, if you've got a 2-bedder, 1-bedder in this huge development and they all go for resale and there's, you know, 45 other 2-bedders against your one, it's always a bit of a challenge. And I think that it's important. It's nice to always buy into a small, unique block. I think that's fundamental.
I'll read a couple of these things here. This guy speaking out about what he saw at the property behemoth, which must be this Ralan Group, in the hope it will help the 2,300 investors who have watched almost $300 million worth of deposits in off-the-plan apartments vanish. when Ralland Group went into administration in July with debts of $500 million and 5 unfinished projects, its demise was seen as some as a symptom of the downturn in Australia. Is probably, okay, they're drawing parallels there. So this is about, so the way it works is that everyone ponies up their deposits to buy a place and then it goes around getting built. But then if these developers go into administration, you blow your dough, right?
Yep, and it happens quite a bit. And that's why I think a lot of people are sceptical and reluctant buying off the plan, because you read these stories and you're like, God, I don't want to participate in that.
Here's something similar, sort of connected with property as well. This is from The Guardian. Low clouds over high-rise, how apartments could drag down property recovery. Oversupply, shoddy building work and fears of combustible cladding have put a dampener on the unit market. What's your thoughts about this, and your experience buying property, which is apartments versus, land with a house on it? What's your preference?
I like land. I like land. I think there's something to say about land. And however, if you're buying in the right suburbs for apartments, you can't go wrong on that side either. But I guess it depends on, I think it always comes back to the strategy of what you're looking to do. A lot of people who are buying land for houses, their capital growth usually outweighing apartments a lot. But a lot of people are jumping into apartments because obviously lower budgets depending where they're buying, and obviously better yield plays.
It is, and again, your asset selection needs to match your buying strategy.
Yeah.
And if you're buying in eastern suburbs where there is a high potential for people that want to live in apartment dwellings, you have young professionals that like that sort of stuff, or even the change in which people are looking to live, apartments can be a good asset. But, I'm reading through all these headlines, and by the way, this is literally, these are all reasonably new stories. Here's another one here. It's to buy or not to buy, the $1 million housing question Australians keep asking. The answer depends on who you talk to. Some say the recent bounce is just a blip. Others argue the property market's turned forever. It's talking about RBA's double rate cuts, all the usual stuff. These stories could be from any time, right? They go back, as I said, a year or go forward a year. There's no shortage of property stories, which I always find quite entertaining.
Well, I got a good story. About 6-7 years ago, a friend of a friend who's a really big trader at HSBC was in Hong Kong, Singapore. Now he's back in Sydney, originally from Canberra. He was telling me 6-7 years ago that the market was crashing here. Every single year, based on the data that he was looking at, the market is collapsing here in Sydney. And in that period of time, the properties that he could have bought and sold, or if he just wanted to hold, and I think these headlines it's not helpful to people.
Also helpful, but I imagine this gentleman has been getting all this market data coming into a machine, a black box somewhere that does all these great calculations that tells you what's going on. And it's been a lot of people who 6-7 years ago were saying that the Australian housing market was going to collapse, and it just went on a huge rally over that period of time. I think of, is it Martin North? Yeah, I think it's Martin North is probably one of the biggest advocates of this 40% drop in the housing market. He made some bets and stuff, and he had to climb up Mount Kosciuszko or something or other. But, what I'm getting at is just reading out these headlines, and here's one as well. Creepy as hell, South Australian property listing goes viral. Right, it's just a lot of it is quite clickbaity. I just want to have a look at it, or I'm interested in it. But how serious are people reading these stories? Whether or not this is how you should be getting property market information? Buyer beware.
There's been so much negativity over the years, and that's what the media does. That's their strategy, is putting fear into people. And I've personally bought and flipped properties in the last 5 years and done well. And if I read the headlines, that wouldn't have happened. So I don't know. I think you just got to make your own informed decision.
Well, you have to, because, you can find any. If you want to look for positive stories, you can find positive stories. And I'm just going to read out the next 10 of these things from my Google search, just so you can just hear how this works, right? Chinese buyers are ready to flock back into Australia's market. Chinese tourists come to Australia to buy property. If incomes don't keep up with property prices, we're in danger of a property market collapse. 7 facts you need to know about Australia's property market. QBE Housing look at Australia's property market recovering. Brisbane set for success. Australian property markets roar back to life after 22 months of falls. Wealth in Australia, property now determines class, experts say. Next one, property market showing green shoots, but is it enough to call it a rebound? The next one, is the Australian property market starting to recover? It's just ad nauseum, really, isn't it? Quite conscious the headlines we write need to be a bit better. None of these are ours, by the way. And I'm not giving anyone a particular hard time, but the point I'm making is that you've got to be pretty careful where you get your info.
Yeah, your head can spin a few times after you read all that. You're left to think, well, what is the right decision to make?
And when we come back from our break, we'll have a chat about how you go about making the right decisions moving forward. Back in a moment. Get everyone, it's Phil Tarrant here. I'm with Ben Handler, Director of the Buyers Agent Institute. We're just chatting about media headlines that we're going through right now, and made it an observation that irrespective of what information you want to find, you can find good stories or bad stories. You can always find a particular piece of information to agree with your particular idea on something. You always find something to disagree with it. It's like looking up, what do you call them, ratings when you want to book a hotel. You can always find, good ratings or bad ratings, why you shouldn't be doing something. So Ben, you've been doing this for quite some time, and I know you work quite closely now with buyers agents that are new to the industry trying to build out their capabilities to support Australians into property. What are the good investors doing right now in terms of buying property, and what are the good buyers agents doing for their clients right now to help them do that?
Okay, let's start with the good investors are looking outside, I think, of real estate and domain right now, in the cities where there's low stock or wherever you are where there's low stock. I think the sophisticated investors who are proactive are not relying on waking up in the morning, getting a notification of saying 10 Smith Street's come on the market and then you got 1,000 buyers jumping on it. So what they're doing is they're being proactive. Like I heard a story yesterday, I was having lunch, a guy was looking to buy a house, family home, door knocked an old lady, not sure if it was intentional, was worth about 3.9, bought it for 3 off market. There was no stock in that suburb. That to me is, whether you're an investor or an occupier, like that to me is what the good people are doing. They're being proactive, they're letterbox dropping. A lot of the good buyers agents, what they're doing now as well, they're doing that. They are looking for a lot of pre-market stock, so stock that's coming on the market onto real estate and domain, they are snapping it up before it goes on there. So it's scheduled to go on, they're getting access for their clients before it goes live, and then they're snapping up. A lot of the good buyers agents as well, they're actually calling property management companies or even real estate companies with property management internally to say, have you got any landlords with a 2-bedder between 600,000 to 800,000 for my client that's looking to sell to do a quick deal? So they're being quite strategic and getting in there and trying to find out strategies around how to get access to more stock. And so I guess buyers agents are doing very similar stuff that I mentioned. They're just doing whatever they can to get access to stock outside of real estate and domain.
And do you think property investors at the moment, as confused as what I am after reading all those headlines about not knowing what is happening with the market? So if you're chatting with your buyer's agent and they're giving you recommendations about particular markets, you'd like to think that the buyer's agent's informed about what's going on. They're able to cut through the noise, aren't they?
You'd hope so.
You'd hope so.
Yeah, that's what they're supposed to do.
Yeah.
Yeah.
And how do you know whether or not your buyer's agent is actually able to cut through the noise and give you good informed opinions based on their market research, their understanding of appreciation of macro and microeconomic factors? Like, how far should they be able to go for you?
I think it's important to understand where they get their data from. So if you're telling me to buy in Adelaide, why? And if you're not giving me a report to clarify around your findings of why we should be here, macro, micro, I think you need to reassess why you're using this buyer's agent. The buyer's agent should be presenting, I think, there's so much information online. This is the problem.
Yeah.
There's so much information online that it's actually overwhelming, I think. Like those headlines you're reading, there's just too much. So the buyer's agent should be providing a concise document, like very concise. I'm talking a 2-pager as to why you should be buying, for example, in Adelaide. Just a very clear understanding why. And it should be backed up from a micro level as to what they're currently doing there as well. I also think it's important to understand what they've done personally. I like to think it's nice to know how they've been in the trenches. And so it's usually a good testament to how they're going to execute.
So a good buyer's agent then will be deep in the data and understanding, but will be able to synthesize that for an investor in a couple of pages to say why. Even though they might know a million other points of reference or whatever, it's just being able to crystallize exactly why a particular area, particular product, particular asset, a particular property suits a particular buyer. They should be able to crystallize that really tightly.
I think so. I saw a report about 3 months ago it was like 14 pages. And I'm thinking, how is a buyer or a client going to digest this?
Yeah.
And so I think that's the game. You want to get a very concise document.
I use buyer's agent for all our purchases, and I pay them good money for them to tell me what to do next, right? And normally when they say you need to be buying this area, and I've got this particular property which I've found that suits your particular needs at this given time, considering your portfolio, I like to go ahead with that without having to question them too much, because I'd like to think that they've gone through and been able to work that out. I don't need reams and reams and reams and reams and reams of information justifying why a particular property might be right for me. I like to think that they got it right. And I might challenge a stress test them on a couple of points just to push a little bit and see how thorough they've been on that. But that works for me. And I guess, using a buyer's agent, that's what most people want. But if you're new to buying, you're probably a bit different, right?
Yeah.
Where it sort of takes time to get that experience to trust.
Yeah, and I'm assuming you've got the trust there.
Oh, yeah,
it's
huge
built,
amounts of
so you're
trust.
not going to question it. I think if it's your first time and you're looking to get a buyer's agent, you want to do your due diligence. I think you want to make sure that they're putting you somewhere backed up on something. They're not just saying buy Queensland because I've read about it, it's cool.
Yeah.
I like it.
Well, I think a lot of buyer's agents just follow other buyer's agents, right? So going back to my first point, it's important as a property investor that you get your team together so you can make these informed decisions and hopefully listen to Smart Property Investment. You are a more informed property investor, so you are making those decisions. And Ben, it's always good for you to come and have a chat with me. And I've enjoyed that quick flick through the papers from the weekend. And again, it's just reinforced to me that we're lucky that we've got such diverse information outlets here in Australia to secure property investment information from, but you can't be across all of them. So trust those few that you trust, and hopefully Smart Property Investment is one of them. What's next for you, mate? Tell me something new, something interesting going on in your life.
Well, I think after just hearing all those headlines, I've got to take a Nurofen for more the negativity. So probably take a few of those after this.
Yeah, it's probably all right.
Just focusing on the Institute, just helping people turn buying property into a career, and it's exciting. There's a big shift I'm seeing going on in the country, which is good, with people looking to put more emphasis on helping the buyer. That's my focus.
Well, that's what it should come down to, right? We all want a better outcome for buyers, and those that choose to use a buyer's agent, well, they've got an advantage, is my point, as long as it's a good buyer's agent. So
That's right.
I think everyone's highly invested in growing and building out this community of property investment professionals, and we've got our very small role to play, and we'll tell the stories, but there's guys like you out there doing your stuff as well. So thanks for coming to the studio and having a chat. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's going on in property investment right across this great nation, smartpropertyinvestment.com.au/subscriber. If you're a social media person, just search Smart Property HQ across all the social channels, and you can keep connected with what's going on and hopefully being a more informed property investor. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people. The good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.